Our conditions remaining bearish, majority bearish on S&P 500 at 13-1. A little bit of a shorter-term rally we've seen here in the last few days. We'll see if that does continue here. We've got futures moving lower by about a half a point right here, running into that resistance area, this resistance range that we're currently dealing with now on S&P 500. Here, this supply zone, we talked about this yesterday, that we've sliced right through that level. Now we're retesting that area inside of this range, and so the scenario now is to see if we get rejected by this area and if this downtrend is going to continue, or if we're going to gradually work our way back up into somewhat of a new uptrend. This is still relatively early in that phase. Potentially we could rally up a little bit and then continue that overall downtrend right here, particularly since we're at the bottom end of that range, but now we're counter trending back up into that corrective zone. There could be some weakness still here on S&P 500, particularly with the Fed yesterday keeping rates the same. We're seeing bonds moving today. We'll jump down to that chart here in just one moment. We're seeing the trend condition on the breadth of the market, the number of stocks above 50-day moving average in the S&P 500 sitting at 40. And so that means that 60% are still under that 50-day in a downtrend and bearish. So we've got majority bearish still on breadth. Also, we've seen volatility starting to come back down into that 20 range, and that's still elevated based on good, strong bull market trends. Typically, it's during a good solid trend, we're down into these ranges down here in that 15, 16, 17 range, and at least in this most recent rally, some lows, potential lows of that 13 to 14 range. So we're still a little bit elevated. We can see it on the chart here as well. And over this market rally that we've seen on S&P 500, as it's been moving higher, then we're seeing volatility ultimately dropping and moving lower with a couple little fits and starts along the way right there. So we'll see if we do get an increase in volatility. If markets do start to pull back right here, run into that resistance, that's kind of the current scenario on S&P 500. In terms of managing that, the way that we manage that is essentially the size of the positions and the amount that we are in the market. Based on stop levels, getting stopped out, the number of holdings, position sizes, and so forth. So that's one of the strategies to utilize this trend indication is by the position size that you're holding. How much market risk essentially do you have in the equities market as it's trending higher, as it's trending lower? And so these can be portfolio management tools to say, hey, the market conditions are just not conducive to holding a lot of positions, or I'm just going to be sitting in cash, or I'm going to jump back in at certain times, and being able to utilize that. If you're a little bit longer term time frame, go out to the weekly time frame. Use this weekly time frame as kind of the position allocation decision maker to say we're at the upper end of the range. We're getting some weakness right here, and this may be an area where I want to lighten up on my overall positions. Again, just managing risks for some potential volatility to the downside, and that is on the that's on the weekly time frame. Let me jump over and let's look at bonds real quick here. We've got SHY, that short end of the yield curve, rallying right here. You can see that bullish pattern here on the 1 hour time frame back to majority bullish. That also means that these rates are starting to drop, and this is the 2-year back down to 393. Pretty aggressive drop after the Fed announcement, and is continuing that overall move. We're seeing TLT bullish, majority bullish at 11, majority bullish at 14 on the 1 hour time frame. You can see looking like it wants to gap higher up to 92 as that 10-year is also falling. So bonds are anticipating, Fed mentioned that they may cut rates twice in 2025. So bonds are anticipating that, at least as of this morning. We'll see if that affects the equity markets today. We're seeing Dow Jones Industrial Average, also similar type price pattern to the S&P 500, majority bearish, but a little bit of the short end of that trend back up to 2, and so seeing that that's responding to this rally that we've got. But again, you can see on the time frame, the rally is not a whole. It's not super impressive when you look at it like this, just to say we're back into supply where we could get some selling and push things back down again. If that's the case and we get another push, we could retest this for probably one last hope at a rally and some continuation to the upside. If not, more than likely, then markets have got a ton of work to do even now to be able to recover some of these this current trend. But we've seen that before, and that can happen pretty quickly. we also need to just be aware of some of those economic conditions that are really hovering over the market. You've got inflation, you've got potential slowing in economic growth, and interest rates are remaining relatively high. That could be an issue going forward also. Let's jump over and look at the triple Qs. This is NASDAQ 100, seeing some rejection there at that underside of that 618 range, and also the underside of that supply block right here, where you've got this range now where there was a lot of selling sliding through this, a lot of selling. Now you're looking at continuation of selling running into these overhead supply resistance areas, just where there could be additional selling starting to take place. After a little counter trend, you get a sharp sell-off down. We'll keep an eye on that, see if that happens on triple Qs. We're seeing that on the Russell 2000. It's down inside of a demand block now to where we could see some rally. We're oversold. On the daily time frame, we've got 13 and 1, majority bullish 9 and 5, but again, it's just looking very counter trendy. Let's take a look at USO oil. Still holding up, but not no real confirmation move to the upside yet, and we'll see if that continues to hold this downtrend currently, with a little bit of a indication of some demand starting to come back into oil. GLD had a real big, nice run up, majority bullish, 14 and 0 across the board, and again, getting really expanded on that shorter term time frame where it could use some retracement, some consolidation, something like this. It's at all-time highs. If we get more risk in the market, we could see it continue to go higher, but it's certainly getting extended at these levels. We're seeing SLV also with some nice price pattern there. A couple of charts to consider today, showing in our filters. Again, if you don't have the filter criteria, you can add those, join our Discord group, and get the chart settings and the setups here as well for your filters. Sports trader SRAD. Nice confirmation bar on earnings, big volume back into momentum. Nice looking pattern set up right there on SRAD. Another one to consider is IMAX, a similar type price pattern as it is. Got a nice move back up into the momentum zone. Also some increased volume there for IMAX. That'll do it for today's update. Everyone have a fantastic day today.